Good morning, it's Ken at Tortoise Capital with a review of the weekend trading report for February 8th, 2020. Go Chiefs. Markets in bullish volatile conditions, significantly overbought on all of the look-back measures except the 3-day, which had a slight pullback on Friday. Green bullish with the price respect to the 200-day. The ADX has pulled down to green neutral. Just coming out of that bullish move. Risk index is abnormally volatile here. You can see the risk Z histogram has rolled up into the spring, tentatively optimistic for long side swing trading. All U.S. all the time here for March, with the one exception of Japan as a counterweight to the U.S. large caps and tech. ETF2 is exposed at 70%. On a monthly, this held support at the previous month's low and has been moving up tentatively higher. It's already past Z2, so this has been an extraordinary move. The market has been in summer, fall, in the middle of the Red River for the summer, so that's still favorable. And I think if Trump has succeeded in surviving the impeachment, and Democrats continue to self-immolate with the Iowa caucus debacle, proving they're incapable of walking and chewing gum at the same time. If only they had known that a bunch of people were going to vote at the same time on the same day in Iowa years ahead of time, and if only they hadn't had a bunch of Clinton people designing the software that would count all those votes so that Bernie Sanders would get screwed, maybe they'd have a chance. But since they seem incapable, there's still room for this monthly move to continue in the months ahead. On the weekly, there's the sell-off last week didn't even penetrate the dragon, found support and just was 4 or 5% gains just this past week. We're deeply into the summer. All systems go. Daily market health check. You can see the 1-day, 10-day, and 30-day look-back ranges. We're pushing at that all-time high. Pulled back slightly, but still, deeply in the overbought condition. MACD is on the cusp between fall and summer, so 1 or 2 days of support and gains here above the dragon, and then this would quickly become the beginning of another summer leg up, which I think would test these other green lines where we would add positions. On the downside, you have the 30, the skin of the dragon, the spine of the dragon, the Bollinger Band mean, the belly of the dragon, and then Z1, and then long-term fair value. But postured for more gains. ETF BMR portfolios, big wins in the tech sectors. The winners continue to win. Tech and healthcare in the U.S. all the time. Even the industrials had a nice bounce. Defensive plays in the internationals like Brazil and Latin America suffered. Big gains, Microsoft, United Health, United Tech. IBM, do you need to know much more? Even Boeing had a nice bump, and that bodes well for the Dow. Biotech and healthcare. Same ideas in the broad set. basically the U.S. market, all large caps and tech are just dominating. The rest of the world's suffering. In the ETF2 lens, Russia had a nice bounce. Utilities had a nice bounce. Well postured in the growth indexes in the S&P 500 as far as green and white, but otherwise it's technology leading the way. Shifting to the daily from Friday. No signals in channeling and overreaction. That pullback wasn't enough to trigger those. Lots of dojis on Friday, and many well postured in the auto framer. So I'll be looking at 3M. In the ETF 30s, again, lots of dojis as well. Brazil, oil exploration, energy. Had some nice plays. Still a handful of super pinches to work with. I like United Tech in that sense. It's still early in the move. Extremely tightly compressed pinch box too. The doji was, of course, going to set up a lot of nice reward to risk ratios for mechanical entries for swing trading one day at a time. Here's the table for all of those. Plenty of goodies to choose from. Lots in the materials and energy sector as well as Brazil. RLFF showing the biggest extremes between the current price reflected by the RL10 and then the long-term fair value expressed as multiples of ATR. That long-term fair value being the RL270. Oil, energy look like places to be. Walmart as well. I mean, anytime Walmart's 4 ATRs below its long-term fair value, how do you not go look at that chart? I don't know. Lots on the daily squeeze to choose from. Again, that's typical of a trending market that also had a tight range day on Friday. Lots in the spring have made their little turnarounds. So energy, the Russell, metals and mining, finance, materials, lots to choose from. Clear leaders, again, consumer discretionary, tech, and staples. And then among the Dow 30, lots in the spring. And then the key leaders, Microsoft, IBM, Coke, Procter, and Johnson & Johnson, a murderer's row of relative strength leaders. 3M is the anomaly, deeply oversold in the 10-day look back, as are Brazil and oil. Key leaders in the greens all the way, that's the strength leaders, pushing the upper envelope. Anytime you see real estate and the S&P and technology, that just tells you how powerful the U.S. market is right now. What else do you need? The pullback rebounded nicely, measured pullback here, testing all-time highs. The slope of the 30 has pulled back enough that this is now ready to resume a new leg up, and if it breaks out above here, it's off to the races. RL90 slope peaking and rolling over, but the 30 has pulled back and made a nice turn. This looks like the pause that refreshes here, looks like here, and looks like here, and both of those were followed by, after the support at the bottom of the river. That's what a big long move looks like, and that's a $20 move from here to there. So this could be $20 from 320. So 340 is definitely in sight. That's everything from Tortoise Capital. Keep your risk measured, powder dry. Respect the strength of this market. Watch the Dems set themselves on fire. How's that going to change in the next 2 months? I don't see it. The only thing I'm concerned about here on the downside would be the pension money and the annual money that gets reallocated in January is probably already in, and so you got to figure out where the buying pressure is coming from. So the pullback that we often see in the second half of February is could be coming up. So that's on a technical basis. We know where our stops are, we know the support levels are, but otherwise it's long and strong in the U.S. until proven otherwise. Take good care, and we will see you in the chat room.